Okay, we got 3 people over here on Instagram. We're waiting for more people to join us.
Okay.
Folks on Instagram. Unfortunately, Shashwat doesn't have Instagram, so you guys can hear him on YouTube. If you want to see Shashwat, let me go live over here. I haven't gone live. I'm talking to myself.
Okay.
Anyway, this is gonna be fun. This is our first
Yeah.
attempt in doing this.
Yeah.
Yeah, so this is going to be wonky. There's going to be lots of errors. It's not going to be as smooth as an edited video. So yeah, I
Mm.
think live has
Nice.
started.
Yes.
Dave Prasanna, are you able to see us? Yeah.
Yes.
Okay. So those of you who want to see Shashwat, he doesn't have Instagram. So if you want to see him, you have to hop over to YouTube. Be Rich. On Be Rich, he's live. But you can hear him over here on audio because I put the speaker on. Hey
Yeah.
Shashwat, want to say hi?
Yeah. Hi, guys. Hi to everyone on YouTube and hi to everyone joining us from Instagram. I hope people can hear me on both ends.
Yeah. So I hope people on Instagram can hear. Otherwise, it's going to be shameful. Anyway, I can't help it because Shashwat is not on Instagram. But anyway, those of you who are on Instagram, try and join us on Be Rich if you want to see him, and we will try and keep this conversation going. We got some people from Italy saying good morning to you, Shashwat. Lovely
Good
life
morning.
is saying hi to you.
Yeah. Good
Tamil,
morning.
Tamil is
Hi.
very difficult for me and Shashwat. But Anganga, I'll try to keep it in Tamil. But Shashwat will find it very hard. He'll stick to English. But we'll try. Anyway, let me give the point of this whole going live was because of what happened in the US yesterday. We saw a market correction in the US and got a lot of people by surprise because they were not expecting this market correction to happen. Because though Trump has been in office for some time, over a month now, he's been doing a lot of things, shaking, rattling, and rolling. But the market seemed to be steady with all what he was doing. And most people were coming out and saying, it's okay. We're going to be fine. Don't worry about it. We even had Jamie Dimon from the bank saying, don't worry about it. Tariffs are good. You guys shouldn't be complaining and whining so much. In Davos, he was sitting there saying, what Trump is doing is right. We didn't know how much of it was just for the public appearance and how much he really honestly feels this. But, Jamie Dimon was saying this. But yesterday, what happened was we did have a lot of volatility in the market. The S&P 500 fell down. Sorry, not fell down. Fell by 1.7%. It's the
Yeah.
worst it's had in a couple of months. Gold has surged year on year by 10% because it's more and more people are rushing towards gold. So who of you have been investing in gold will be seeing this in gold. And the US dollar index is also at 108, strengthening against all emerging currencies. And the FIIs have already withdrawn so far in Indian equities in January 18,500 crores, which is around $2.3 billion. If you, especially if you discount that one day where Airtel wanted to pull $1 billion and the FII stepped in the market and they bought 8,000 crores worth of Airtel shares, and Airtel took out $1 billion. If you discount that, even that day was a negative day. A lot of people thought just looking at the figures that it's positive. That's why I keep warning. Just don't look at the numbers, especially the FII numbers. It really doesn't tell you what is happening, and you should try and study it further. So, what do you feel, Shashwat, about this? About the U.S. market volatility?
I think that the US market volatility is going to be very difficult to fit into any one narrative because there's so many moving parts. There's too much happening at the same time. I don't know about the people at home, but at least personally, I feel that there's so much noise that's going on. I don't know how to differentiate what's the important signaling effects and what isn't. And I think this is the point. The point is that we're not able to differentiate between what matters and what doesn't matter, and that means that there's going to be a lot of uncertainty. Like John Maynard Keynes, the economist, said that there's going to be uncertainty breeds liquidity problems. So when you have a lot of uncertainty, people are going to fly to cash. So that's basically what we're seeing happening, because gold is treated as almost a safe haven or a substitute to cash to some extent, to the point where even any one currency may not be treated all that great, but gold will be treated with some sort of financial respect, which basically entails that it's always going to be a liquid asset. And by liquidity, I don't mean that someone's going to be willing to buy it at any price. The point is that it retains some value even during panic times, whereas a lot of assets don't. For example, during panic times, a stock price is going to fall. Your bond treasury, depending on which country you're in, is also probably going to fall. What will end up staying then will be the price on assets which people deem very trustworthy, like the US Treasury bond or gold. But today, with Donald Trump in power, even the US Treasury bond, a lot of analysts are casting their doubt on it and saying that I don't know. They don't feel that the U.S. Treasury is something which they trust in. That being said, I still don't think. I personally, this is my personal view alone, but I don't think that the U.S. Treasury is under risk of capitulating, even under Donald Trump. But my point is that a lot of people are worried about something like that. So that tells you that the investment market today has a lot of uncertainty. I won't say panic, but there's a lot of uncertainty.
Correct. So when you're talking about gold prices, if you look at the current gold price, it's at 2,938 of on Feb 19th. That is a 10% increase year on year. And the forecast, even Goldman Sachs has said by quarter four, they're thinking central bank buying inflation hedging will take gold to 3,000, while Morgan Stanley is pegging it around 2,800 by mid 2025, which have already crossed. They're saying they're being conservative because they're expecting the Fed to cut rates. I don't know how Fed will cut rates. But if you look at India specifically, the demand is up 5%. Usually it's the festive season which you'll see the demand. But it's already up in the first quarter. I mean, first part of this year, it's up. And gold ETF saw record buying in $37.5 billion worth of, sorry, not dollars, rupees, 37.5 billion rupees worth of inflow in January alone. And RBI itself has purchased 2.8 tons in January. So this is all signaling long-term strengthening. So how much do you of our portfolio now? Last year and all that we were talking about 5% we should allocate in gold. Do you think maybe we should be looking at gold at maybe 10-15% in our portfolio weightage? If you're looking at weightage in terms.
Okay. For this, I think I have a clear answer. The point is not about the number of the ratio depending on current macro trends. Yes, current macro trends, if gold prices are, of course, cheaper and then you want to, accumulate some gold when it's cheaper, that makes sense. But accumulating gold because you believe that in the next 2-3 years, gold is going to rally up, I think that it may make sense if you plan to make a big purchase down the road. Then it may make sense to pre advance that purchase to now. But at the same time, I also want people to think about the fact that gold is not going to provide them any dividend or growth, in the sense that the only growth that comes from gold is its peg against inflation. So if there's inflation going on, yes, true, there is inflation going on, and if there is inflation going on, gold is going to be able to keep track with inflation. It's a great place to stay in when you expect that the market is going to wobble and, like you said, basically fall down. Fall down. If it trips over like an iceberg or something and it decides to fall flat on its face, immediately you get some of your money out of gold and you go into stocks and start buying stocks. But the point that I'm trying to make is that I wouldn't purchase gold just because in the next 2 years it's going to go up. I would think about why I want to purchase gold. Is it because I want to keep my money in something that's going to retain its value because of inflationary pressures, and then I want to buy stocks for the long run? Or am I buying gold purely to make a trade on gold? That is, in the next few months it goes up, I'm going to sell it then. That's my only point here. If it's for a trade, I would think twice. But if it's for any other reason, which is to beat inflation or to have a safe home base while you wait for the market to crack and then go and purchase stocks in the market, I think those two scenarios do make sense.
Okay, that gives us some clarity as far as gold is concerned. So when we're talking about gold, of course, we have to talk about Indian rupee and dollar, where it's going. And currently, the rupee is at 86.56 as of this morning. And historically, it's moving towards as the rupee weakens. And the key drivers seem to be the US bond yield at 4.5% and the trade tension. is escalating. Trump has said up to 25% on autos, chips, and pharma. FIIs are pulling out of India and shifting their assets to US, especially the Treasury, in if you're especially an American. So there's a future risk. They're saying that Indian rupee may slip to 88, even 90, if the Fed delays interest rate cuts, which it looks like it's going to. And the US bond yield may even push past 5%. And the RBI Forex Reserve at $630 billion can help with some volatility. But what do you think the rupee is going to go? Where do you think?
I hate to be the bearer of bad news, but I think that for fans of the rupee,
Hmm,
it's going to have a tough time. It's going to have a tough time because it's not because that anyone in the world wants the rupee to have a tough time. It's just a function of macroeconomics.
hmm,
If the interest rate, the interest rate in the US, in India is going down, by the way, because we have the RBI governor who decided to bring down interest rates a peg,
hmm,
and we know that in the US interest rate declines have been coming down. There's a lot of pressure in the homeowners market. So my point is that there's going to be a flight to safety in the sense that investors tend to feel that emerging markets like India, China, these middle income countries, along with a few low income countries, are more risky than countries like the US, Canada, and then continents like Europe. So the point here that I'm trying to make is that when assets flow out of India, given that our assets are capital assets are going to flow out of India, people are going to exchange the INR for dollars. One second point here to be made is that because there's a tariff, that means that our exports, which are basically IT and pharma, if they're going to be taxed at 25%, then you're going to have lower consumption of Indian products. And if lower consumption of Indian products, there's less of a need to convert US dollars to INR. Again, that's another downward pressure. What are India's imports? That's the question. India's imports, we import a lot of food, we import oil, we import raw materials. All these things are not things which we can stop importing tomorrow. We can't we can't just wake up tomorrow and say I'm not going to drive to work. That's just not something that's going to happen. We can't wake up tomorrow and decide that I'm not going to cook food today. So my point here that I'm trying to make is that our imports are very sticky. That is, they will persist. Whereas the US imports, like IT, it's something that's not so sticky as, let's say, crude oil. So there's going to be a lot of downward pressure on the rupee, and I'm not going to predict a number. I think my other uncle, your brother, would be someone who would be more capable of doing something like that.
I
But
agree.
a very rudimentary analysis can tell you that the rupee has a lot of pressure going on for it.
Correct. So, if you look at an investment strategy to hedge against this depreciation of the rupee, so should we focus on this export driven? Like IT right now is overvalued. Most of the IT stocks, you and me cannot consider them. But pharmaceutical seems to be an option. The rest of it, auto components and textiles, I don't see any opportunity of exports. Being a hedge. And stay. Should you and me stay away from things like oil and gas, electronic, and capital incentive sectors?
So,
Which need
so
to
that's the
import.
thing. So when we talk about, I mean, we've announced a series which we're going to analyze one company per week, and the first company that actually picked up was HCL, and I did a valuation for HCL, and you're right, it's far too expensive for us to. I mean, at least we did a valuation of HCL, but the point is that we're not. I don't think we're allowed to talk about HCL or any Indian companies and their valuation on this channel, but you're right in the sense that in general the IT sector does look
You,
quite
you can
expensive.
what you can say is, would you buy it or not? You can share with us that much. I mean, you
Okay,
don't have to talk
okay,
about. You're not recommending it for anybody or considering it for anybody. You personally, are you buying it? Is what people would like to know.
okay. I personally in my portfolio today, I'm not adding IT sector stocks. This is in no means an advice to anyone. Everyone's free to do as they wish. But today, I personally, Sashwat Swaminathan, am not adding to my IT sector portfolio. And the reason for which I would love to share, but I am not able to. But the point here is on valuations. I hope that is clear. Anyway, let's move on from that. The main point here is you asked me about whether we should think about de-investing in crude and IT and those. So one thing I have to say is that no matter which sector one picks, it has to be a sector where valuations matter. Valuations are important. So if your valuations are too high in any given sector, doesn't matter whether it's a sector that has promising promising returns in the future, whether it's a sector that's a stable sector that is there's no growth but there's no degrowth, it's a very stable sector. It's none that doesn't matter to me as long as I'm paying the right price for it. As long as I'm able to buy $100 share for $20, or I'm able to buy a 100 rupee share for 20 rupees, that's all that matters to me. And we discussed this, but there's going to be a video today in Beerich on staying the course.
Yeah,
And also down the line, we're going to have another video on a Japanese stock which we've analyzed, which is going to come out. So we're going to be looking at the nitty gritty of valuations, and I hope that that gives people a sense for what we actually think at Beerich about how to value a stock.
correct. So when you're talking about this and what's happening with the INR and where should invest. Of course, one of the major players in our market are the FIIs, and the outflow in January has been bleeding the whole of last year, and now this so far $2.3 billion since this is the largest withdrawal in for January since 2022. Just taking the month of Jan, and people are saying this is because the treasury yield is going up and the Indian equity is become very, very expensive in terms of price to index if you look at,
Yeah.
and our current account deficit is increasing risk perception for foreigners if they look at it, plus the geopolitical tensions if you look at it. This is also offering some sentiments issues for them, and sectorally also if you see the FIs have been punishing the IT sector, the pharma sector, the banking, especially with the NPAs which are happening there. They do not
Mhm.
have clarity in it, and the stressed corporates which we have.
Yeah.
So, when do you think the potential rebound might happen for this? What might be the catalyst for the FIIs to? Will it be the US yield dropping or the GDP growth looking good, or what would be the trigger for the FIIs to change their heart?
Okay. I think, counterfactually speaking,
Hmm.
if none of this was happening and the US was doing fine, I would still believe that the FIIs would have de-invested at some point,
Okay.
because it's only a function of how valuations move and how markets move from booms and busts. The point I was trying to make is that valuations are high. I mean, no one can deny the fact that valuations are at historically at a higher level than they were before. This is just one reason why it went down. There could have been many other reasons that it could have gone down. You have Israel Palestine going on. You have Ukraine Russia going on. All it would have taken was another border conflict in India to tank our stock market. Because I'm being very honest here when I say that when you have high valuations, you don't need any particular reason for the stock market to come crashing down. It's a price effect. If I'm selling, then you see I'm selling. That impacts the price you can get of your investment if you wanted to sell today. So your perceived liquidity goes down. So if we get into a selling loop, then we end up having a huge motion out or inside a country, depending on the prices moving up or prices moving down. So that being said, you asked me what could possibly trigger a recovery in the Indian economy. I think it's as simple as this. The best thing that we can do, okay, there are two things. One, if you're the Indian government, the best thing the Indian government can do is to ensure broad-based growth and is to ensure that the economy doesn't tank. This is the first objective. The second objective is to keep inflation under check, because today a lot of the Indian public is facing high levels of inflation in their grocery price. I'm sure all of you who've gone monthly shopping this month must have felt this increase in their price grocery prices.
Yes.
So yeah, so you do the shopping for your household, so I know you can attest to this. So
Yes.
the point I'm trying to make here is that on the government there are two policy things which they need to focus on. Us as investors, we need to focus only on two things. One, look for the right valuation in the company that you're buying. Do not buy an expensive stock. There is no promise that tomorrow you're going to have good times, and that even if you buy an expensive stock, you're going to be given a margin where people are going to still pile on to an expensive stock. We don't know that. Things
Yes.
are very uncertain. So be careful in what valuation you're paying. And the second thing, don't worry too much, because in the long run, even if you pay a slightly higher price for a good company, it's going to average out through discounted cash flow, which we'll be talking about in the video in the upcoming week, which we're going to analyze a Japanese company's valuation. But the point is, even if you slightly pay more than what is necessary for a very good company, you'll
Hmm.
still be fine in the long run, as long as you pick the right company which will last in the long run.
Okay. So when we're talking about this lasting in the long run, I wanted to get your opinion because a lot of people have been asking me this, and I wanted your opinion on this. The government started this production-linked incentive schemes,
PLI,
and
yeah.
a lot of corporates are, using this. Even the Tatas are using this, and this whole green energy and manufacturing, rural, trying to give employment in
Yeah.
India. They're pushing this.
Yes.
What is your
Yes.
view on this? Do you think this scheme alone will give trigger some kind of positivity towards our GDP or inflow of investments from the FDIs at least?
Yeah. So I just want to address one point because I'm also keeping an eye on the chat. Bharat asks how to avoid manipulation by finfluencers, sir. That the PE is low, so it's the right time to enter the market. They're making FOMO for the beginners. What is your opinion on this? I think we should give Bharat some reassurance before we move on. So I think that first of all, no one should pressurize you into jumping to invest. If
No,
someone is pushing you to invest right now, you're going to miss the opportunity. That
don't
means
invest.
that
Don't
don't
invest.
invest.
Yeah, just
Don't.
walk away.
Yeah. Take your time,
Hmm.
be deliberate, move in a fashion that you feel comfortable with. You are not going to, lose on a big opportunity. Many big opportunities come all the time. Okay. So don't feel pressurized to invest. And I
Spend
hope
time learning.
yeah, I hope that this channel has pushed people more to take things slow and patiently, like the 52-week challenge, which you're talking about. I want to talk about the 52-week challenge as well later on. But the
Yeah,
point
but
is that,
today our evening video is all about that. So
yeah,
I
yeah.
don't want to
So,
like let the cat out of the bag.
okay, fair enough.
Hmm.
But the 52-week challenge is important. So I want all of you at home to take it slow, take it easy, be consistent and deliberate in your investments.
Yeah,
That
yeah,
being said, your other question about PLI, that's interesting. So the thing with PLI is I have a few criticisms as someone who's studying economics. I have a few criticisms of the PLI.
yeah.
The
Hmm.
point is that I don't want to be paying Indian tax money to pay foreign guys to come and manufacture in India. This is not something I want to do.
Hmm.
I do not care about foreign assembling in India
Hmm.
because that's what's happening. We have talked about Apple coming in and assembling in India. They're saying that we're creating broad-based growth and manufacturing sector growth. We're not actually manufacturing. The manufacturing is happening in countries like China, and they're coming here and just assembling it. They're already making the pieces and they're just putting it together, which is like 5% value add, and we're paying them about 7% on that assemblage. Only 5% of the iPhone is value added is being done in India, whereas the incentive that we're giving them is basically about 7% of invoice, which is 7% of their total bill. So we're we're paying them a lot of money to be able to come and do something that's not creating technical investment in India. So I think that it's a good initiative to want to create more skilled employment in India.
Hmm.
But at the same time, I think that we should reconsider how we incentivize that. I
Yes.
am in broad agreement that we should be doing something to create skilled jobs, but I feel like the strategy we use to create skilled jobs should be something where it should be sustainable.
Okay. Understood.
Yeah.
So you in principle you think it's a great scheme, but you would tinker with it more to align it to actually give the incentives correctly. You feel the
Yes,
carrots are being given for the wrong reasons.
absolutely.
Okay, great. So, talking about that, I want to step into India's growth and domestic investment themes. So,
Yeah.
despite all this outflow which has been happening, this thing which is manufacturing in China plus one, which is happening, everyone's talking about China plus one. Even in
Yes.
Japan, investments are flowing on this China plus one. I
Yeah.
wanted you to tell the audience what you think is China plus one and what is your whole thing. This, like what you rightly said, Apple, Foxconn is investing in Tamil Nadu and this fueling of electronics and auto exports in India. So, what do you think about this China plus one?
I think China plus one is a little misleading because right now what's happening is US plus one.
Correct.
So what's actually happening right now is US plus one, not China plus one. Because, yes, before Trump came into office, I think that Xi Jinping was the one making controversial decisions and pushing the world a bit closer to countries like India than it was before.
Mm,
But today, now that Trump has come into power and he is isolating the US, I think that China's dominance and rather China's influence on the economic, socio-economic, and political sphere of the world has increased, because there are two centers of power: one the Eastern Axis and one the Western Bloc. And today, the US is pushing away their Western Bloc allies closer into the arms of the East,
mm,
and Europe is not comfortable with this.
mm,
But that being said, when we're looking purely at manufacturing per se, I think that China plus one is benefiting a lot of countries, but at the same time, I don't know whether those benefits are going to directly translate to a lot of benefits for India in specific, because there are multiple other countries which are in the line waiting to take the place of China compared to India. Because I'll tell you one thing, our
mm,
labor laws are very strict.
mm,
I care about our labor laws. I care about labor rights. But the point is, these are the kind of labor laws that aren't actually assisting in providing a quality of life for our workers.
mm,
It's rather hampering the quality of life of our workers.
mm,
And we need to rethink some of the regulations that we have,
mm,
because there's a spirit of the law and then there's the application of the law. The spirit of the law is to help our workers and guarantee the working class a good standard of living. But I don't know whether these laws are actually ensuring that. I think that these feel a lot more archaic and not to the times.
okay.
And the problem is that I would rather see some reform there and have some more jobs come in and see more of my countrymen have some work which is skilled, rather than being over, let's say, oversaturated in agriculture, which is what we're seeing in India. The point is that agriculture is oversaturated. We need some skilled labor in either the manufacturing side or the skilled side. We're
Mm,
not able to get to the manufacturing side, so we're jumping over manufacturing and going to skilled. No
mm,
one is talking about making the transition from the primary sector to the secondary sector to the tertiary sector.
mm,
Raghuram Rajan says that maybe we missed the gun. Now it's everyone wants to get into manufacturing, so it might be better to get into services because we have some level of advantage there. That's
mm,
what Raghuram Rajan says, and I think he's a very sane individual.
mm.
And if we're going by that logic, I definitely think that if we're going to do China plus one, it needs to be a huge push on services, because we need to quickly generate a lot of skilled labor for our people.
Correct. And I wanted to talk about this thing which everyone has been talking about, and even I did a video about this, which I spoke to you about briefly when we spoke privately about this green energy revolution in India, because Indian demand for power in India is going to go up. We are growing, and demand in power, not only in industry, commercially and domestically, it's going to go up. So when this is considered, what do you think about investing in that sector, in a long play as a value investor, knowing that our demand is going to be there and people are going to come in? Should we be looking at companies which are in green related power generation and distribution transmission?
Okay, this reminds me of a fun and sort of cheeky speech which Warren Buffett gave in 1999 before the dot-com bubble crash. He said that this was back when everyone was saying that internet is going to take over, everything's going to go to the internet. It was true. A lot of things went to the internet. But he says in the speech, he says that the same thing happened with cars. Everyone said that the locomotive, that is, cars, were going to revolutionize the economy. And he said that back then the narrative was that we should all pile our money into manufacturing stocks. The point there is, if you look at the number of car manufacturers in the 1930s and you look at the number of car manufacturers in 1999, and today, by the way, today there's about 10 car companies that are manufacturing and dominating the market. And not all of them are financially sound. A lot of them are very sick and unhealthy.
Mm,
So, what Warren Buffett says is, would you have felt comfortable buying 200 of the? How will you pick that one car stock, which is
correct.
you're a normal person. You can only keep track of 10 max. Let's say you're a super genius and you can keep track of 20 companies at a time. 200, 300 companies are there. How are you going to narrow down to 10% of that? because everything is in its infancy. Everyone is saying that, look, cars going to be everywhere. I'm going to have 20% growth year on year. Every company has the same story. How
Yeah.
are you going to differentiate? He said you would have had a better chance of shorting horses. That is, you sell short on horses, you would have probably made more money than buying car companies. And
True.
I think I'm not smarter than Uncle Warren. And if Uncle Warren thinks that this is the way to approach, sectors which have a huge potential, I think that's the way to go about it, because I personally can't predict which green energy company is going to be the one that's going to rule the roost 30 years, 40 years down the line. But I might feel comfortable if we believed in stuff like shorting. We don't believe in shorting.
Or we
But
don't.
if we did believe in shorting, I would have felt more comfortable shorting crude oil companies than like buying energy companies,
I
green
agree.
energy companies.
So that I do agree. There is a big problem because yes, the sector as a whole may be a great sector, but picking a winner is very difficult. Then the counter argument to that would be, then should we look at an ETF? An energy company ETF that has conglomerate of 200 companies or whatever. What would your view be on that then? Do you think that would
I think that's
lower
a good
lower my
question.
risk?
I think that's a good question, and I think now the question is more is something which sounds a bit more feasible to me. The point that I'm trying to make is that you have 100 rupees, suppose. I don't want anyone to risk their principal, because when you're investing in something which is very new and very nascent, I think that there's a lot more risk that is involved when you have when you have a nascent industry. The point is that if you're investing 100 rupees, I wouldn't want you to risk more than 5% or 5 rupees on something that's very nascent. It the point is that you invest for the long run, and you need to keep a sustainable uh, investment base, portfolio base for your future. And if you're risking more than 5% of that, I personally wouldn't feel comfortable, like, playing with more than 5% of my investment, because let's be honest, this is
Hmm.
playing.
Correct.
This is, yeah.
It's true.
So, yeah.
So to conclude, to draw this conversation to a conclusion, broadly speaking, this uncertainty in the US market, this Fed policy shift, global risk volatility, gold we spoke about going towards 3,000 probably, maybe not, but could go. And the FI is exiting India the way they're exiting. And India's long term fundamentals may remain strong. But right now, in the short term, we can't see anything. So, what would be your advice looking forward to investing?
Okay, this is my advice to myself, which I'll lay out, because
Hmm.
I don't think I'm at that point where I'm capable of giving advice to other people. But I'll tell you what I tell myself, which
Hmm.
is that I think I need to stay on the ball. I need to keep track of what's happening,
Hmm.
because it's good to keep track of what's happening. It's going to tell you when it's an opportunity to dip in and buy a little more than what you would otherwise in a tiffin coffee range. You should keep track of stock prices so that you get an idea of when stocks are undervalued. But at the same time, I want I would want to tell myself that no matter what happens in the next 4 years, because of all the uncertainty,
Hmm.
things are a cycle. So no matter what happens, as long as you're buying an 80 rupee share for 20 rupees, you're still going to make money on it,
Hmm.
whether it's Trump, Trump, or whoever it is. Doesn't matter. Trump, Obama, Biden, pick your poison, I guess. It doesn't matter who comes into power. It doesn't matter whether it's BJP, Congress,
I
AAP,
agree.
none of those parties.
Yeah,
The,
that's
the
true.
point is that uh, be it US or India, as long as something that doesn't go very, very wrong, which is why you have a hedge in gold. You buy gold because when things go very wrong, that's going to be there as a base for you. This
Hmm.
is where gold comes into play. So you need to hedge for all sorts of risks,
Hmm.
and you need to ensure that you stay consistent. And I would urge all of you to join the 52-week challenge. If you don't have an Instagram account, do make an Instagram
We
account
have,
and do
we have
join the 52
rechristened
week
it. We have rechristened it as a Tiffin Coffee Range Challenge.
Tiffin Coffee Range Challenge.
So to keep it, so the spirit of the group is, one is consistency. The other is, of course, staying within those ranges, no matter how exciting the market may look.
Yes.
Yeah.
So the Tiffin Coffee Range principle and the consistency principle, I hope that that is the advice which I would give to myself, and that is what I'm willing to share with those of you at home. Do you
Correct.
have any advice for the people at home?
No, man, you have given it brilliantly. That's why I loved having conversations with you, because I feel like I'm an audience member sitting here and enjoying the conversation. Because most of the days I have to sit alone and talk to the camera, imagining
Ah,
to have a conversation with my audience, my tribe members, our family members. But it is always lovely to have you on the channel where we get to have a conversation. That's why I let you do most of the talking. I just love listening to you saying, and you are very smart and you're very
you're
astute
being
in your
too.
analysis. You're growing. You're growing. I understand that.
Yeah.
I know you don't. I'm not trying to compare you to anyone. I'm just saying in your own levels, you're growing, and it's nice to
Okay.
see growth. And as an uncle, I feel proud of it. There's nothing wrong in that, I guess. But
Thank you.
talking about personal things, what are you reading? What's on your desk? I'm sure a lot of the viewers would like to know what are you
Ah,
reading now.
this is the first question I feel comfortable answering.
Nice. People see it in reverse. I think we'll have to tell them because it'll be
Oh
mirrored.
shoot. Okay. So I'm reading a book about the Medicis, and this book is a book about an Italian financial family like the Rothschilds. These are a banking group who basically ruled Italy during the Renaissance period, the start of the Renaissance period in Florence, and they commissioned a lot of art and they commissioned a lot of other cultural aspects in Florence, which today still last if any of you have had a chance to visit. So the book is all about how they made their money, what their life story is, and it gives an idea because funnily enough, the interest rates, the returns they were making back then were also 10 and 11%. So
Wow.
it looks like the world has come full cycle to the point where we're back to the world where 11% is the going norm.
Wow.
So
That's interesting. So there is some benefit of reading history then.
yeah, no, and let me tell you one more thing. I
Hmm.
have this, I have the Wealth of Nations on my desk as well. And in this book, interest rates are also around 10%. And
Wow.
this book are 300 years apart. And we are 300 years apart from this. So what does that
Wow.
tell us?
There's a lot of information in history. We'd be
Yeah.
smart to read history and read a lot of history. We should.
Yeah.
Yeah.
So you basically have 300-year cycles where things go back to the same point they were before. There's 300-year gap between Smith and Medici's, another 300-year gap between us and Smith, and things seem back to you back to usual.
Yeah, I agree. I really
Yeah.
agree. It is back to usual of sorts.
What are
Anyway,
you, what are you reading?
me, I'm reading this thing called Do Hard Things. It's a great book. It's about the idea that we always are sold this idea, do hard things, meaning like it means killing yourself. No, it doesn't. It's all about mental strength. It's not about physically killing yourself. It's about learning to cope with yourself mentally and to deal with your emotions mentally. That most battles are won, even physical battles are won in your mind. And if you do not develop that mindset, and if you cannot learn to focus and keep your mind as a servant, you will tend to suffer. And this is the first few chapters what I've been reading, which is a very nice book. I highly recommend it. Anand, of course, asked me to read the book because we are working on a book, like I told you. Me and Anand are working on a book. So it's one
Yeah.
of those research books he's asked me to put my head into. And it's a lovely book and it's incredibly smartly written. And you would actually like it because the guy who's written the book, he bases it out of a mindset of a runner, which you are,
Ah.
and you like
Okay.
running. So he talks
Yes.
about how a runner's mindset, you learn from that and you can apply to everything in life. For me, in parenting, for you in investing and studying, and how mindset plays such a pivotal role in success in life. So doing hard things, when you see it sounds like puts you start to imagine that means like really pushing yourself, but it's not. Even David Goggins, which he's a big guy on the internet for his running and his weight loss and his mindset. He's written two books. Even him, people misunderstand him that he's saying that you must just go ahead and kill yourself exercising. He doesn't. He does spend a lot of time, if you've read both his books, that it's all about mindset, that you must want it. And the mind is the most powerful thing you have. And
So
once you
what
conquer your mind,
yeah.
huh?
So
Yeah.
what would be the mindset switch for something like investing? Like how do we
Ooh, that's a good question. But this, not only this is in investing, it's us fumbling around in the dark in every single thing we're attempting. But once you learn to turn that switch on, that mindset switch on, it is like a floodgate. It's like a dam breaking, and you're able to apply it everywhere. So let's say you manage to crack the investment code, become a value investor. It not only helps you in value investing, it helps you in all spheres of life. Let's say you manage to crack the code of weight loss. That code helps you become a great investor. So that's what the trick is. The trick is try different things and try to get that thing which teaches you that mindset. Once you've learned that mindset, it's just a question of applying that same principles in anything you want to do. It's a wonderful thing. So, like a learning a toolbox, getting yourself a toolbox or a toolkit. And once you have that universal toolkit, you can take it and put it anywhere and apply it. The greatest thing any human being can learn is patience, and that is the hardest thing. Even in this current
Um,
climate, yes, things are volatile, things are crazy, people are saying all kinds of things. You have to be very sensitive. People are highly opinionated, but if you sit patiently on this, the storm does suddenly look a lot calmer. Your famous thing, what you like in your headspace, blue skies. you
Blue
know
skies, yeah.
yeah, beyond the storm clouds, beyond the cyclones and the tornadoes, you can see blue skies. They're up there. You just have to wait for the clouds to part, and it's there, always there.
True.
Anyway, we wish you a wonderful weekend. Enjoy your studies as you grind on your weekend. I know
Thank
you
you.
have a lot of projects and homework and whatnot to finish. And stay safe. We'll see you next weekend. Next weekend, I want to do another live. Warren Buffett has written a letter. I've got my hand on that letter, and I want to discuss that letter with you in great depth next week. So that week,
Done.
at least we'll try and get you live on Instagram and on YouTube simultaneously. That'll be fun if we're able to.
I hope the Instagram audience were able to hear me through.
I hope so too.
Okay.
I don't know. I'll probably get some feedback later on from everyone saying they heard you or not.
Okay.
But anyway, we will create a dual channel of sorts and get you on Instagram, or at least plug in the audio in such a way that it's very audible in Instagram too. Anyway, thanks for joining us today. I know all of you, it's a Saturday, that to a Saturday morning. Some of you are working, like I am, and some of you are studying, like Shashwat is. Some of you have managed to travel somewhere and have a bit of a long weekend, 2 days off. I wish you the best. Do be safe out there in all your fun and revelries, as I always say. I read so many news about young guys and girls, getting themselves caught up in situations could be easily been avoided if they just decide to stay back home. So, if you do go somewhere to a friend's house and have fun, decide maybe to stay back there and get up in the morning and get back home. And, a day lived, one more day lived is better than not having that day. So keep that in mind in all your YOLO which you guys are doing out there. Anything else you want to add, Shashwat, before we sign off?
No, I have been keeping track of the comments, but we had an agenda planned before we came here, so I hope that you guys don't mind. But next live, we will definitely take in more of the comments.
Yes.
But that being said, I'd like to thank everyone for joining us on Be Rich Live. It's I feel very I feel very grateful that some people have decided to share 43 minutes of their life with us.
Yeah, me too, man. Always. I'm always grateful, eternally grateful. Even if an audience of one, I'm happy. People,
Yes.
my team always wonders what a kind of a crack I am. I think like what even if one guy is watching is enough for you. I'm like, yeah, it is. One person is enough. You can have a conversation. It's enough.
Yeah.
I feel plenty. Anyway, have a wonderful day. We'll see you again
You
soon.
too.
Bye, Shashwat. Signing
Bye
off.
bye. Yes.